With that, let's get to the managements who have announced numbers. Torrent Pharma is on our radar. The company posted a slightly disappointing set of Q2 numbers with revenue and EBITDA marginally below the CNBC TV18 polls and additional costs linked to the CuraTio acquisition weighing on profit. The company, however, says they're confident of outpacing industry growth by about 3 to 4 percentage points in India and Brazil, and they also see mid to high single-digit growth in Germany. Even as US is likely to remain subdued, they said in their press release. Sudhir Menon, Executive Director and CFO at Torrent Pharma, joins us. Sudhir, good morning. Thank you very much. We have some idea of what you are expecting in terms of growth in India and Brazil, where you have given a very clear guidance. What is this predicated on? Why are you confident that you will be able to outpace by a good 3 to 4 percentage points the market growth?
Yeah, so I think the most important factor for us to give guidance on a double-digit growth as far as our branded business is concerned is, of course, the market performance, right?
Okay.
So basically, as far as India is concerned, if you look, the market seems to be stabilizing at double-digit. So July was around 14%, August was around 12%, and September, I think, was around 13%. And I think the market should sustain at low double-digit growth from here. So for us, historically, we have been growing minimum 200 basis points higher than the market, as we are over-indexed on certain high-growth segments. In all our focus therapies, we have been outperforming the markets. I think last 1 year, we have been increasing our field force, and which should help us in getting incremental growth from here on. Second, our focus on new product introductions have played out quite well over the last 24 to 36 months. And all the relevant size new product introduction which we've had in the last 24 to 36 months, we are in the top 3. So the contribution from new product in the overall growth has inched up higher, I would say. Add that CuraTio portfolio, which is in a covered market, which is growing 1.6x of the overall market. On an overall basis, it should help us to register incremental growth as far as India is concerned. From a Brazil perspective, again, I think the market is growing at low double digit, and we have been outperforming the market again by 200 to 300 basis points. What has played out for us over the last 12 months is there's a good amount of new product launches which have happened in Brazil, and most of them are doing quite well, I would say. Add to that, over the next 2 to 3 years, we feel that good amount of new product launches which will come in, reasonable size launches, I would say. And on the top of it, we have a 10% share of the generic portfolio in Germany, where the scale-up is happening very fast, I would say. So I think on an overall basis, both India and Brazil are looking quite good to deliver a double-digit growth.
Okay. Double-digit growth for the India plus Brazil business together, right? Is what you're talking about, Sudhir?
Yes. Yeah, individually, both should grow at double-digit.
All right. Individually, both should grow at double-digit. Got that. I think the pain point is the US business, right? Because there are 2 warning letters there. There is pricing pressure as well. Do you think it could get worse before it gets better?
No, so I think the pricing pressure is continuing in the legacy portfolio in the US, right? And US is obviously the largest market, and it's not very easy to ignore this market. And given the challenges which the industry has been facing, it's very important to find good spaces which helps you to navigate through this challenging path. So while there are steps which we have taken in terms of our R&D efforts, focusing more on complex product, but I think at this point, what is more important for us is to see the facilities getting cleared at the earliest. So Indrad facility got inspected. We've responded to the US FDA, and I think we should hear from them very soon. The Dahej inspection is still pending, I would say. But based on the favorable outcome, I think over a period of 6 to 9 months, the new product approvals should start flowing in. And surely, I think once the new product approval starts flowing in, it should add positively to the overall revenue and profits of the company. But there's a waiting time at this point, I would say.
No, but the warning letters were issued in 2019 no, for Indrad and Buddy. You will have any clarity on whether it's a 2022 resolution, 2023, earlier, later half?
Yeah, you're right. I mean, it's not Baddi actually, it's Indrad and Dahej.
Yeah. Okay.
You're right. Indra got a warning letter in 2019 and Dahej got a OAI in 2019. And I think there was a good amount of delay which happened because of
COVID.
the COVID happening, right? And I think the
Okay.
inspection started in 2022, early 2022. And as I said, Indrad is already inspected. And we should hear from the US FDA in 90 days' time. And
Okay.
that's the scheduled time when US FDA comes back to you.
Okay.
Dahej, as I said, the inspection is still to happen, but we expect the inspection to happen anytime soon.
Okay, all right. Hi, Mr. Menon. I had a couple of points then with regard to what you have just said. One is, what about margins? You have been in that vicinity of around 29.5 to around 30%. Do you hold on to that? Point number one. And the US business, you gave us a fair bit of color. But do you think on a quarterly run rate, you can do better than this $37 million that you delivered in the last quarter? Will things look up from here on is what we're trying to understand.
Yeah, sure. So I think quarter one this year, we registered an operating EBITDA of 29.2. And quarter two, we registered operating EBITDA of 29.4%. I think the way I look at least this level should be sustainable both for quarter three and quarter four. Although there are certain cost impacts which are yet to normalize, I would say, and if that's normalizing over the next 2 quarters, the margin should inch up a little higher, I would say. From next year, I think we should expect a minimum 75 basis improvement in the margins.
Oh.
That's something which I can say. Coming to your point on US, actually, so I think all depends upon when we get a clearance of this facility, right? I mean, as far as the pending new product approvals are concerned, the timing of the approval is very important in terms of finding out what economic value it can bring to you, right? But given the uncertainty at this point, it's very difficult to assign any value. So I would say worst, at least for the next 6 to 9 months, the existing run rate of 32, 33 should sustain.
Okay.
Any brand acquisition on your shortlist? Something we should hear soon?
No, so we just completed
Curatio.
Curatio acquisition, right? So we are more focused on our integration efforts of
Okay.
Curatio with our existing business over the next 6 months, I would say.
Fair.
So currently nothing much to talk on any other potential deal.
Okay. I just had one more question on the US business, right? Given all the challenges that you spoke about, you said that the margin should be sustainable overall in Q3 and Q4. But on the sales run rate, you did about $38 million in Q2. What do you think the average could be for the second half of the year?
Should be around the same number, I would say. Around 35 is the number which I can guide.
Okay.
Okay.
All right, we'll leave it at that. Sudhir Menon, pleasure speaking with you. Thank you very much for joining us. Have a great 2023.
Thank you.
Okay, we have to take a break now, and thereafter, Snehal Shah of Century Textiles